With so many investment options in the market, how do you determine which strategy is right for you? To help answer this question, let's quickly compare and contrast 4 of today's most common strategies: active management, momentum investing, buy and hold, and diversification. Let's start with the first one, active management. With this strategy, a portfolio manager tries to proactively predict what the best performing asset classes will be. However, history shows it is extremely difficult to pick the best asset classes all the time. In fact, over a 5-year period, nearly 90% of all active U.S. portfolio managers underperform their benchmark. The second strategy is to invest in last year's top performers. This is referred to as momentum investing. While this strategy seems logical, history shows us that past performance is not a good indicator of future results. In fact, over time, it is rare for a single asset class to remain the best performer for multiple years in a row. Now let's look at the third approach, buy and hold. This involves investing in a single asset class and holding it over time. Historically, there are times when a buy and hold approach outperforms other strategies, but it does come with its own unique set of risks. The primary risk is a possible rapid fluctuation of the asset's value. This is known as volatility. With this strategy, even if it works out okay in the end, it can sure make for a wild ride. The last strategy is to allocate investment holdings into different asset classes instead of just one single asset class. This is known as diversification, and it involves taking an investment portfolio and slicing it into multiple pieces. Each piece represents an investment in a different asset class, such as large companies, small companies, international companies, bonds, or commodities, just to name a few. The goal of diversifying among various asset classes is to reduce volatility, creating a smoother ride. In the end, there are many factors to consider when determining the right investment strategy. We believe a properly diversified portfolio based on individual objectives, risk tolerance, and your own time horizon is the best strategy for achieving your goals.